What's your assessment of the reaction from the budget? And no doubt, of course, the China stimulus, no stimulus, also perhaps weighing on the Aussie as well.
Yeah, it's all part of the mix, right? Just in the last week, we've noticed a lot of China-centric assets, local onshore and offshore China markets are trading on the weaker side and looking a little bit vulnerable. And the context here is we're getting these very bold pronouncements from the Politburo, the Central Economic Work Conference, all suggesting it's full throttle settings when it comes to fiscal and monetary stimulus. When it comes to unpacking the detail, there's still a lot of question marks. The pronouncements are certainly bold, but we lack concrete detail. And I think for markets, the sense is that to the extent that we are looking at the prospect of more support, there's a lack of immediacy around it. I think at the end of the day, the most impactful support policymakers in Beijing could deliver would be bread and butter support. That is to say, fiscal handouts or large fiscal transfers to middle and lower household incomes. That would underpin growth quite handily. And I suspect, given tariff risks next year, policymakers are probably holding their powder dry. Were they to deliver that, I think you could probably sound the all clear a bit more comfortably on the outlook for China's markets and commodity prices, but we can't. So there's this ongoing tension between markets that want more immediate support and policymakers that prefer to take a more incremental, slower approach. And that's opening up a little bit of downside for the Aussie recently. And on top of that, we've got these expectations for a hawkish Fed cut, which are weighing as well. The RBA is pivoting slowly and incrementally closer toward rate cuts. I fully expect that come the February meeting next year, they'll formally adopt an easing bias. And in that environment, it's not clear what's going to pull Aussie out of its funk. And we think it probably trades lower still, down into the low 62s in Q1 of next year.